guys? You are watching Passive Earnings, and in today's video, we'll be talking about two alternate strategies that we can utilize or make use of in order to beat TSLY ETF. TSLY, if you are not aware of TSLY ETF, it is extremely high yield dividend paying ETF by yieldmax, and they provide extremely high monthly dividends, and that's why a lot of people that who I know are flocking into it and basically throwing money at it to make gains in terms of dividends. Just to give you guys my portfolio update today. My portfolio stands at $85,000. I am down 0.5%, and that translates to $400 today. But I'm not worried. I'm selling cash secured puts and covered calls on SOXL and TQQQ respectively. So moving on to the topic of this video, if you would have invested $118 on January 3rd in Tesla stock, you would have made up till now $266. That is close to 125% return on investment, and you could have sold out of your stocks and do whatever you would have wanted. So $147 per share you would have made in this scenario. But if you have missed the train, now is the opportunity to follow the other two alternates of TSLY ETF. So in TSLY ETF, basically last month it returned, or actually it returned today. So today was the payday for TSLY ETF owners, and they got 58 cents per for this month from TSLY ETF. I'll show you guys put strangle strategy, basically the first alternate that will make you a lot more than just 58 cents for $15 that you invest. Okay, so looking at it now, so today is September 19th, and we are looking at the 3 days expiration. What I'm gonna do is I'm gonna come here, and since the stock price is up today, the current price of share is $266, roughly around $266. I came down to selling put. So what I'm doing is I'm creating a sell put option contract with 95% of chance of probability of chance of profit with a delta of 0.045. So uh, not even a zero point 0.1 delta. We are selling half of the delta, basically half 0.05 delta value, meaning like there's only 5% probability that the stock of Tesla will come down to this price, which is our strike price for selling a put. So I'll select this for now. You can go up if you up since you think that Tesla stock will go up. You can select a higher price, but to be on a conservative side, I would select 245 strike price, and I will sell a put, and will be making $26 here. But I don't want to do that, because otherwise I'll have to submit $24,500 to Robinhood or any brokerage that you are selling a put on. So what I'll do is I'll buy a put, which is called the put strangle, just one value below that, which is $242.50 with 19 cents per share. So when I select this, what I'm seeing here is for $250 that I send it to Robinhood, I will be making $8 or $9 now, right? So what I can do is I'll select continue here, and since we said we have $1,400 to make $58, we have spent 14 $1,400 for 100 shares of TSLY ETF to make $58 for the month of September in just 3 days. If I were to select 5 of these, I will be making a minimum credit of $40 or 35. So it keeps on switching, but around $40, right? So this I will be spending $1,400, or not even that actually. Now it's saying 1,200. So I can select here 6 contracts of put strangle, which will be close to the same price of 100 shares of TSLY ETF, and I'll be making $50 in how many days? In 3 days, not 30 days, 3 days. And what is the probability? I showed you guys the probability of um, the Tesla stock price to come down from 265 stock price to 245 strike price is less than 5% or 4% to be more precise in 3 days. So that is how you can make $50 in 3 days instead of 30 um, from Tesla stock itself. If you are a true believer in Tesla, this is a bullish strategy. Selling puts is always a bullish strategy. So um, you should believe in this. Like, you should be able to put down $1,450 to make $50 in 3 days any day. And if you repeat this 10 times, or even not that, if you do this like 4 times, and if you consider like we are making this much in a week, not just 3 days, which actually is very extremely conservative stats, and then still we are making at least 3 times of the total returns of TSLY ETF. So that is one strategy that I really wanted to show you guys. So maybe you should start doing this, and you will not be paying any of the expense ratio, which is extremely high, 1% of the total TSLY ETF for the folks who handle it for you guys, right? So this was first strategy that I wanted to show you guys. Another strategy that I really wanted to show you guys, the second strategy, is buying Tesla 1.5 bull share. Basically, this is a leverage stock. It's a 1.5 times leverage, meaning if a Tesla stock value goes up one by $1, this will go by up by $1.5, meaning $1.50. Same goes in the downturn. If Tesla stock falls $1, this stock falls 1.5 times, $1.50. So if you want to, if you are a firm believer that Tesla stock will over time will go higher in price, you should buy it somewhere around like this, like $5 or 88 cents or something like that, and gain a total return of 189%, close to 190% return in a 1 year, not even 1 year, 9 months. uh, so that's how you should be playing it. What I would do, honestly, if I were so bullish on Tesla, I would run this strategy here, run put straddles, and the profit that I make, right, like $42 in this case for one strategy for in 3 days, I'll invest this $43 buying 1.5 times, or the leverage Tesla stock that you see here. And that's how you're gonna get the high rides. So you'll be making all these returns, extremely high returns, if you are so bullish on Tesla stocks. So that's about it. I hope you guys like both of these strategies. I really wanted to make sure that I provide some good value to you guys with my videos. So if you guys really like this video, please make sure to hit the subscribe button and leave me a comment so that I know um, if my efforts were worth it. Thank you guys again for watching this video, and I'll see you guys in my next video. Till then, take care of yourself and people around you. Goodbye.